Hello and welcome to the September with me, Fiona Sincotta, Senior Market Analyst at City Index. So kicking off tomorrow, we'll see German GFK consumer sentiment. We've also got the SNB rate decision. No change in rate is expected. And then we do have a lot of US data tomorrow. So we've got Q2 GDP figures, jobless claims, durable goods orders, and plenty of Fed speakers to be watching out for. So we're just going to start by talking about the US data that we'll be expecting. So as I mentioned, the Q2 GDP, that's expected to confirm the 3% annualized figure quarter on quarter in Q3. And then we are also expecting jobless claims. Going to be watching jobless claims pretty closely because let's not forget there have been concerns over the US jobs market. And jobless claims are expected to come in at 235,000. That's just slightly up from last week of 231,000. But let's not forget that the previous week to that, jobless claims jumped up to around the 260,000 level, which was a 4-year high. We've also obviously seen weakness in the non-farm payroll reports and the downward revision. So just really keeping an eye on jobs numbers coming out of the US at the moment. Also, durable goods orders expected to show a 0.5% decline. That's month on month, down from a 2.8% decline in the previous month. So we're watching the data, and it comes as the market continues digesting Federal Reserve Jerome Powell's speech yesterday, where he adopted quite a cautious tone as far as further rate cuts were concerned, which has actually given a new lease of life into the US dollar. This is the US dollar Japanese yen that we're looking at here. Now, interestingly, we're seeing that US dollar Japanese yen break, or attempt at least to break out of range. This is a range that the pair has been trading on since the beginning of August, so about 6 weeks now. Capped on the upside by around 148.50, capped on the lower side by around 146.25. Now we're just breaking up above that point now. That's also the 200 SMA there at 148.50. If we do see a move towards a close above that level, that would be really significant in bringing the 150 level, which is up here, into focus. Just as far as the yen is concerned, we're seeing a little bit of weakening in the yen after we saw a slowdown in the PMI data. We do have Bank of Japan minutes that will be released overnight. So if we do sort of see that slightly more hawkish slant in those minutes, then that could help the yen recover some lost ground, and that may keep the pair within this range. But definitely to be watching out for if we do see that range. If we do find that the market is disappointed by the Bank of Japan minutes, then we could actually see that that actually powers this pair up higher. So as I said, levels to be watching out for. We want to close above 148.50. That's just going to bring this high up here, a minor resistance of 149.15, and above that we've got the 150 level. And then we've also got, sorry, the lights turned off. There we go. Also, just on the downside, the level that you need to be watching out for on the downside for a break is that 146.25, which we are still somewhere away. But we've got the 50 SMA there at 147.65. Just whilst we stick with the US, let's just have a look at what's going on in US equities. As I said, we've got that sort of the market just really weighing up a slightly more hawkish stance from or cautious stance, should I say, from Federal Reserve Chair Jerome Powell. That's just brought US stocks off their record highs. Dow Jones rose for a record high yesterday of 46,720. We're off that today as we trade currently around the 46,155 at the time that we're recording this. But I mean, we're staying above that rising trend line. Obviously, if we get weaker than expected data, that could fuel expectations of more aggressive rate cuts from the Federal Reserve. Markets currently trading in, pricing in around 90% probability of a 25 basis point cut in October, with another cut in December. But if we do find that we get weak data, that may support, particularly jobs data, that may support expectations of more aggressive rate cuts, which could help stocks push higher. This is the level we need to get above, the 46,700. But the thing is, I think we just need to have a look at that candle there. The shooting star can be a potential reversal indicator. So basically it's suggesting that there was not much buying demand at those higher levels. So we need to see a break below this rising trend line support and the 20 SMA there at 45,800. But the real support comes in here at 45,000. I think if we see a break below that 5,000 level, that's going to then expose the 200 SMA at 43,000, which could see sellers really gain control. So that's what we're watching as far as the US is concerned. Now, I did mention we've also got the German GfK consumer sentiment data, expected to see a slight deterioration to 23.6, I believe, down from 23.6 to 23. So slight deterioration. German data has been a little bit weak so far this week. We had the PMIs. Well, we did see the composite PMI, so that's a good gauge for business activity, rise to a 60-month high, but there was still ongoing weakness in that manufacturing sector. Today we saw IFO business sentiment came in weaker than expected amid concerns over the outlook, and then consumer sentiment that could be coming under pressure again tomorrow. But let's just have a look at the DAX. It's the DAX. It's trading in a falling channel dating back to mid-August. This is interesting because the DAX has been falling as we've seen US stocks rise to record highs. So I think we have seen a little bit of a rotation out of Europe back into the US. We see Europe was very much supported at the earlier part of this year on boosted by defense stocks, on hopes or expectations of higher defense spending. But since then, we've seen this return focused towards that. And we've seen that rotation out of the DAX into the Nasdaq and the tech stock in the US. So but we're in this falling trend line. We have recovered from the low, which was 23,300. Just trying to really need to push above that the upper band of that falling channel in order to bring 24,000 into focus. That's also the 50 SMA. It's also that rising trend line that dates back to the end of April. We're going to rise above that. That means that we'll be very much looking up towards those fresh record highs, record highs at 24,600 level. On the downside, failure to break out of this channel could see a retest of 23,300. Below that, we'll be looking towards the 23,000 level, which was the low that we saw back in June. So I hope that you've liked everything that we've spoken about today. And if you have, then please do give this video a like. And for more videos like this, then please do subscribe.